Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst, Nick Nassad. Today is Wednesday, September 1st, 2010. It was a pretty exciting day in the markets, but first let's talk about some fundamental data that was the catalyst for some risk appetite. We saw manufacturing in China grow at a faster pace in August after it had the weakest performance since early 2009 in July, signaling that the economy's slowdown is stabilizing. The Purchasing Managers Index rose to 51.7 from 51.2, exceeding forecasts, a government-backed report had showed, while a separate PMI released by HSBC and Market Economics gained to 51.9 from 49.4. Stocks in Asia advanced after the release as it offered reassurance that China's moderation in growth isn't deepening. In Australia, manufacturing, while positive above the 50 level, did decline, but a second release from Down Under helped to bury this weaker report. Turning to that second report, the biggest quarterly surge in consumer spending in 3 years fueled a 1.2% gain in GDP in the second quarter in Australia. Household spending was up 1.6% on the quarter. This sign that Australia's economic expansion is spreading from the mining industry to households boosted the case for the nation's central bank to resume the Group of 20's most aggressive round of interest rate increases. These releases from Asia, like I mentioned, had helped to boost stocks in both Asia and Europe, and then in New York trading, we got another report which helped to power forward New York stocks. While we did have a disappointing jobs release, which we will get to later, the ISM manufacturing PMI in the US defied expectations and rose to 56.3 in August from 55.5 in July. Both employment and production sub-indexes were stronger, and economists had the overall headline reading actually declining to 53.2. So this news, like I mentioned, helped to propel US stocks higher, and the impressive round in manufacturing data from around the world could help to increase outlooks on growth, but these gains may be capped until the non-farm payroll report is released on Friday. Now let's turn to our market highlights, and let's start with the Australian dollar versus the US dollar. And as expected, it rallied following the better than expected GDP release, extending its bounce from yesterday when it came close to testing support at 0.8850 level. We moved all the way up to 0.9090 as we extended those gains for the Australian dollar in the US session following the better than expected manufacturing PMI. We rallied past our high for the week that we had seen at 0.9020, and we even managed to push above our previous level of resistance here from August 17th at around 0.9075. We could see that we have pushed past the 61.8% retracement level at 0.9050 in today's trading, so our next level to the upside could be 0.9120, and past that our highs from the beginning of August at 0.9220. Taking a look at the euro-dollar pair, we snapped a 2-day bout of risk aversion, or at least correction, to last week's labored rally and shot through our resistance at the 1.2730 level, but as well as our highs from last week at 1.2775. If we zoom this pair out a bit, we see that we now land squarely back into the consolidation range we had in the middle of August, where we have this level of support from, which had been resistance now, and the next level of resistance to the top side is the 1.2915 level. Here too we are solidifying some breaks. First we had a downward sloping resistance trend line that we cracked in last week's trading, but then we have another one shaping after our high was established last week, and we move above that today as well. So we'll see if this means that we see a further correction to the downswing we had during most of August. Again, the next level of resistance is this 1.2920 area. The bounce back in risk sentiment was evident in most of our charts as the US dollar gave back its gains from yesterday's session. So here we're looking at the pound dollar, and we see it rallying from support at 1.5335 to test the 1.5490 area, which was where we have our 200 period moving average currently. Now, we had been talking about the 1.5450 level as an important level of support, but we have crisscrossed it in the last few weeks, so it may be losing that importance, and we actually trade at that level right now at filming at around 11 a.m. Now, we did have a weaker report from the UK on its manufacturing sector, so that could limit the gains for the pound, and we may see the pair continuing this sort of downward trend we have seen in this pair, though we'd have to see general risk sentiment in the markets shift before we see the continuation of this down move. Taking a look at that manufacturing data, we saw UK growth slowing to its weakest level in 9 months in August, and a sign the economic recovery may be moderating. The PMI posted a print of 54.3 compared to July's 56.9, and weaker than expectations for a small increase. In the Eurozone, meanwhile, we saw the final version of August's PMI very close to its preliminary reading at 55.1, which was a 6-month low. Staying with the theme of the euro and the pound, we see in this look at the euro-pound pair, following yesterday's very strong movement, we had a small correction, but then we extended a rally in the European session as a result of the weak UK data. So we moved above our resistance level, which had been our high back here on August 17th at the 0.8280 level. We hit our high today at 0.8325, and we did see the pair correct a bit in New York trading on the back of some risk appetite. In the battle of these two pairs, it is the pound that usually tends to gain on risk sentiment that favors risk on trades. So here too we have to see we've broken a downtrend and moved away from our moving averages. So we'll see if we have a further correction in this pair if we follow what we've seen in some of our other pairs. From the fundamentals, the manufacturing data from the UK could show that recovery is losing steam, and with austerity measures coming down the pipe, forecasts are for slower growth. While in the Eurozone, there is growth, but it is uneven as Germany is showing a strong recovery, but the periphery nations are weaker. So in the battle of these two pairs, perhaps fundamentally, the European currency is reflecting a stronger Eurozone economy compared to the UK one. Continuing to stay in Europe, let's take a look at safe haven demand in the Euro-Swiss franc pair. We wanted to follow up as yesterday we broke through an important level of support and set a new all-time low in this pair. In today's session, with risk appetite the theme of the day, we saw the euro rebound, test this level, had been support as resistance. It did hold as resistance for a short time, but then with the US data coming out very positive, the euro continued its advance from earlier in the session, rallying to 1.3035. Here we see that we come close to the 200 period moving average in this pair, and a lot will now depend how investors respond to the stronger global manufacturing data, and if that could create a new sense of risk appetite in the markets following our decline throughout most of August. Switching gears now, let's take a look at currencies tied to global growth outlooks and prices of commodities, which, as expected, rallied in today's environment. So here we're looking at the US dollar, Canadian dollar. We see that the level near 1.0660 held. As we had mentioned, it could hold in yesterday's video, because we saw last week's trading how twice we were unable to move above that level. Now, it did help that sentiment did swing to risk appetite, and we see the Canadian dollar gaining very strongly in today's session. We came close to testing our lows from the beginning of the week, so we do stay confined within the range we've seen in recent trading. Now, we had been gaining prior to the New York Open. We had tested the 200 period moving average, and with the release of the US ISM manufacturing report, we see the second swing down, making this a very strong day for the pair, for the Canadian dollar. Now, U.S. stocks opened strong and accelerated their gains in the wake of the U.S. data. The Dow Jones was up 230 points by 11 a.m. and the Nasdaq and S&P were up 2.7 and 2.6% respectively. Oil prices were up $2 or 2.8%, which helped the gains for the Canadian dollar. Now, I did mention that we did have a bad report from the U.S., and that was that private sector employment fell by 10,000, as goods producing sector lost 40,000 jobs in the month of August, more than the 30,000 gain in services. This was weaker than forecast and could be a forewarning that August's non-farm payroll report on Friday could show a negative private sector payroll print. Still, traders for the most part overlooked this news as the better growth outlook around the world helped to spur equity gains. Just wanted to take a look at our last pair, the US dollar, Japanese yen, and we see that we had slid overnight and we reached a low of 83.66 following that weaker ADP report. But as US stocks opened and we saw very good performance in equities, this pair rallied in favor of the US dollar. And following the ISM report, we see we even gapped higher and moved to a new daily high in the pair at around the 84.65 area, which was our 100 period moving average, and we can see that the 200 period moving average in a 1 hour time frame is just above this level. So again, we have to see if this recent bout of enthusiasm lasts, as we do have Friday's non-farm payroll report, and there will be a lot of cross currents depending on what we see coming out of that report. But that non-farm payroll report is set for Friday, and first let's take a look at Thursday's global fundamental docket. We already had a really strong GDP release from Australia, and today we get trade balance data. Overnight we get Switzerland's GDP as well as its retail sales. The UK posts a measure of house prices and its construction PMI, while the Eurozone releases its revised version of GDP as well as producer prices. That is followed up in the early morning in the North American session by the European ECB interest rate decision, as well as the 8:30 a.m. Press conference with ECB President Trichet. In the U.S., we get weekly jobless claims, as well as a look at labor productivity and labor costs. Bernanke testifies in front of Congress at 9 a.m., and at 10 a.m. we get a look at factory orders and pending home sales. So a pretty busy fundamental docket tomorrow. So join us for tomorrow's video recap, and we'll go over all of these releases. And with that, I will end today's daily video recap. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching today's video and wish you good trading.